Retail is absolutely broke. We've got personal savings at an all-time low, credit spending at an all-time high. Retail is nowhere to be found in crypto. So things are very bad. So what do you do? Right? Do you invest in altcoins? Do you invest in Bitcoin? I'm joined by Patrick, also known as Crypto Rookies. He is going to tell us exactly what we need to do. What is the solution to this whole entire mess that we're getting in? It's not all bad, Patrick. We got the elections coming up, and there's some good things to look for. The rate cuts, of course. But first, let's talk about the ugly, which is some of these delinquencies that we're seeing.
Yeah, definitely. It's not looking good. On one end, the recession is not new. It's been going on for quite a while. And, like it's not because the government said that there was no recession that it was the case. It's been going on for more than a year. So here I'm showing the personal savings rate. You see this huge spike here, and this is a timeline between 1960 to up until now. So if we scroll, you see here that was really at the bottom around 2005 in July. I forgot what happened around that time, but it was pretty bad. And then there was the crash in 2008. And then somehow the market started to pick up. But okay.
But it seems like the overall trend is down.
Yeah, that's thing. So during COVID, you remember the government printed a lot of money and issued stimulus to the people directly. So often when they print money, the government, they do something else with it. They give it to big companies. They give it to the government itself. They give it to various entities. But it's pretty rare that they actually give it to people directly. This was a case where it went straight into the pocket of people. And you see the personal savings, like since the 1960, it was at the highest at that point. So it peaked like crazy. And you remember that was the peak of the bull run in 2021, which was pretty massive. So there was a definite correlation with people having personal savings because a lot of them, they got the stimulus and they didn't really need that money necessarily. So they used it to buy risk assets. So that was a really good time for the stock market and the crypto market. But since then, we're basically at all-time low. Like last time it was like this was just a few years before the crash of 2008 with the mortgage stuff. So I think we're not in a good situation in terms of personal savings. Then if you look at the delinquency on credit card, it's picking up quite a bit aggressively. Last time that it was at the peak was with the mortgage problem and around that point in time, like right after 2008. I think so. The uptick is pretty bad because remember we had the big thing here with the peak of the personal savings was in April 2020. So right after that, then I think personal savings started to go down, and then the delinquency on credit cards started to pick up. So that's a problem. And then if you look at car loans, and it's not just car loans, but the also credit card here, we're seeing an uptick basically right now. The car loan delinquency in this case. So at the end of the day is that if you have a house and a mortgage, you'll probably stop paying your credit card, you'll stop paying your loan on your car before you stop paying your mortgage. Because I think your house is probably the last thing you want to lose. So that's a big definite consideration to consider that retail is broke, basically, like in the US at least, and many countries in the world is the same problem. So if retail is too broke, that explains why they are not coming back into crypto. When we look at what we discussed last week with investments into early stage project, I updated the price for the last week, and now you see that most projects are in the negative. I updated this thing, like the project that are in green, what we said that were maybe good project to consider. In the last 2 weeks, we would be up 13%. That's actually pretty good. It's a small sample size. Meanwhile, the project in white or red, -10, and the project in yellow, -9. Remember last week, the project in red was actually pretty close to the project in green. And now this week, there was a major downturn in a few of them. And all of a sudden, it's pretty negative. Like the red category is the worst performing one between the three. The sample size is still pretty small, but the point I'm trying to make here is that we might be lucky. At least we got 13% in 2 weeks. It sounds good, but it's a small sample size. I'm afraid that it's not going to sustain. And the
And
thing
for
is that,
those that are watching, real quick, Patrick, I just want to add for those that are watching and wondering, okay, what in the world is this spreadsheet? A couple of weeks ago, posted a video about the top indicators to look at when you're reviewing altcoins. And we went over the FDV, we went over the liquidity. There were a lot of different metrics that we were looking at. So I'll be sure to include the link to that video in the description so you can go back and watch that. This is essentially a continuation of that. So just wanted to throw that in, Patrick, but please go ahead.
yeah, let's say, so I put the percentage gains in green that are positive. Everything else is negative. So as you can see, out of like 20 projects, the vast majority are actually exhibiting a negative return over a period of 2 weeks. And this is the AI category. You remember Nvidia had a pretty good return, like in terms of financial statements, like a week ago. And this week, maybe that's the problem, is that maybe Nvidia is that there was some drama going on with going to court, which apparently is not necessarily true. But the point is that maybe if Nvidia went down a lot this week, that could explain why this red category went down a lot at the same time. But overall, I think most everything is red, except for a few that outperform. One project is up 71% in 2 weeks, the Doja protocol that we discussed. I don't fully trust, but I said that for a short-term trade, maybe that's a good one. It's done.
This
It's
is
up a lot.
because of the market making manipulation that you are, under like you suspect that there's some market making manipulation going on there based on the volume per FDV. Is that correct?
Exactly. I think this, you want this to be good, but this was simply too good compared to the rest. So to me, that's shows signs of maybe manipulation, and manipulation can just last so long. At some point, reality will come back in. So the thing, so I'm not sure I would keep that for more than a year. Maybe just a month or two, see how it goes. But I would be afraid this one would eventually collapse. And the thing, the other one is Palm AI is up 35% in 2 weeks. That's also pretty good. So whether or not that's sustained, it's the big question. The whole point is that trying to find those good projects, it's like finding basically a needle in a haystack. It's very hard to find. And like if you compare to previous,
What is the answer?
yeah. So the thing, previous bull cycle, it was easy to pick project that would go up because there was fewer projects and retail had money to invest. Now, like we discussed earlier, if retail doesn't have money to invest, who is buying those projects? Some of those projects are being pushed by VCs, and I would suggest you should avoid them. I did exclude all of the projects that had a low float versus a high FDV, which typically are projects that are supported by VCs often. So if you stick to the one in green, yeah, maybe they are performing well because of that reason. But regardless, is that if retail is not there to support a lot of those projects that are early stage, like who is buying right now crypto? It's institution because of the ETF. So, and those institutions are not going to buy early stage project like this. So where's the money coming from to support those? And I think if the personal savings is at all-time low and the people are struggling financially, I just don't think this will perform that well, except for a very few, but you have to be so extremely lucky. I think the real solution is to stick maybe to Bitcoin, Ethereum, and the institutional type of projects. And now you have to worry about the next problem, which is that, like, for example, on Bitcoin, if you look at compared to like December last year, we started having like the ETF that came up in early 2024, and then Bitcoin went to an all-time high. But it's been oscillating in that range here for quite a period of time. Typically speaking, like if you look at market cycles, the bull market goes into a parabolic phase about approximately around the time of the US presidential election. So a lot of people try to time the market cycle based on the Bitcoin halving. But from my own analysis, it's really the US presidential election that tend to be highly correlated to the peaks of the bull market in terms of timing. So like in November, it's when the election is happening. I think we'll probably start to see a pump probably around October, maybe last week of September. Because in September, we have Token 2049. It's a really big crypto conference in Singapore. The third week of November. And then there's the Solana Breakpoint, another conference dedicated to Solana. There's also the FOMC meeting that they're going to be probably reducing interest rates. So it's a lot of confluent factor that I think around the last week or maybe 2 weeks before the end of September, we'll start to go into a pump. And I would think maybe this will be the start of the bull market for real. Maybe we'll exit that range. Maybe we'll fluctuate a few more weeks in that range. But if you want to make money, what I do is I play the range. A lot of traders don't make money on a ranging market like this. But if you use gridbots, and let me show you a quick video of what a gridbot is. It's basically that the bot trade on your behalf, but it doesn't trade pushing the price up or down. It doesn't do active trading. It just reacts to other market participants when they buy and sell. So you're basically acting as a market maker. So that means when people sell their token, you're buying. And when they are selling, you're buying. But if it's a ranging market that keep going up and down, you make profitable pairs of trade by buying, by selling, buying, selling as a counter to other market participants. And I think
So the goal here, Patrick, so the goal here isn't necessarily to accumulate Bitcoin or Ethereum. It's more of to make money. Is that correct?
in my case, I do it on Binance and I use a CoinM gridbot. Basically, that means that all the profit are bought back directly into the native token of Bitcoin, and if it's Bitcoin that you're trading. So that means in this case, I am accumulating more Bitcoin, Ethereum, and Solana, and some meme coin. But the gridbots perform really well in a ranging market like this. And I still want to activate the bot on a long trade if you're at the bottom of the range. But you can just let it run up and down and you'll accumulate yield.
There are geo restrictions for the grid bots.
Yes, unfortunately, a lot of them are restricted in many parts of Europe. Looks like the US is the same problem, Canada. It looks like some country, in order to protect you from losing money, they prevent you from making money. So not ideal, but yeah, it's the alternative to using a grid bot is to do yield farming on a decentralized exchange. It's not as good, but you can still do decently well.
Depending on where you are in in the world, I guess. Grid bot strategy is essentially the key. Do you have any content that you have created where that you can point people to
Uh,
learn more about grid bot strategy?
yes, and I have a lot more video coming up, so they can always come to my channel. And also, we did some video in the past where I was doing a step-by-step how to set it up. We can come back to those. But I think if in about 2 weeks the market start to trend up, maybe a grid bot is not the best solution. Maybe just buying if you can with a bit of leverage, not too much. Like if you buy Bitcoin with 2 or 3x leverage, it's relatively safe. If you don't know, if you've never heard of that, never do anything like that. But if you have some basic idea of how to trade and all that stuff, I think it's fine to use low leverage. Very risky to use more than that, but only do it if you know exactly what you're doing. Otherwise, you can lose all your money. Otherwise, just buy, and then we'll probably see a big pump. I would say that should last until maybe October to December of 2025. But there will be period of up and down, and think that there will be period of a big up, and then it will kind of like a trade sideways for a bit, and then goes back to another leg. So you'll be able to use gridbot here and there in between. If not, you could always use gridbot on a long. You still make money, but you would make more money if you were not using a gridbot in those cases. So, but at least to me,
Now,
that's not the best solution because The institutional investors, the pension plan, the governments, all that stuff, they want Bitcoin, some Ethereum, but they don't want to buy altcoin at the moment. And until retail has money to come back into the market, I just don't see this as performing not necessarily that well. So I
Okay,
would,
so it's not that you don't think that altcoins will perform. You just think, at least here in the near future, that because there is no retail, like we just discussed, it's mostly institutions, and so we're going to see more movement from Bitcoin, Ethereum, maybe Solana, because it is big enough. More so from those three.
but I would say it's not more return, but it's on a risk-adjusted basis. If you put most of your money in those three assets, you'll probably outperform compared to trying to chase that one token that will do 1,000% return. I think those 1,000% return was much easier to find previous cycles because there was fewer tokens, and then retail had money to invest, so they were spreading a lot more and pushing a lot of stuff up. So it was in terms of probability, it was a lot easier to find project that would do well. And right now you have to differentiate between early stage project that don't have VC backing that I would recommend versus the early stage project that have VC backing and launched with billions of dollars of market cap and will just go down from there. I would completely avoid the VC project that honestly it's sad to say, but they destroyed the market quite a lot also.
Well, a lot of these projects that you're referring to that are heavily backed, like they're reaching their all-time lows right now. I mean, I'm looking at Pyth Network, Wormhole, Zeus Network. There's Arbitrum that I believe is pretty close to its all-time low. So there's a lot of, whether you believe that we're going to have a future of layer twos or not, that's a different story. But if you believe in the actual technology of layer twos and what Arbitrum has been doing, I think that there are some opportunities there, versus maybe some of the other ecosystems and chains that don't necessarily are not necessarily at their all-time low, right? So I think that there are still a few opportunities, and I think this conversation is going to look a lot different once Bitcoin does go up, right? Because I'm not saying history is going to repeat, but I know that it tends to rhyme, and so if Bitcoin decides to make a move here towards the end of the year, eventually it's going to get to a point where the altcoins are going to start performing as well. But I understand where you're coming from, because you're looking at it from a near future. And right now, to your point, there is no sign of retail. And so that's what we need in order for these altcoins to start running.
Yeah. So the thing, I will stay alert once the government print money, unless it goes into the pocket of the individuals, then yeah, maybe that's when full retail comes back. Otherwise, if it goes into banks and like big companies, I don't think it will have much of an impact. It will have a lot of lag before it get to trickle into the economy and I'll help people in that sense. So I think it will at this moment. I don't think retail will be back anytime soon. Probably I would say at least 6 months, unless something crazy happen until then. But because the thing, if you have the choice to lose your house versus invest in crypto, what you're gonna do? I think you'll keep your house first. And saying you're right about the VCs project that some of them will do a comeback. If you invest in them, you may do a good return. I'm personally avoiding them. Just I want to teach them a lesson, to be honest. They should not have done this to us in the first place. They tried to be too greedy. So I will wait until they have negative return because those VC, a lot of them still have positive return in 1,000% return. So if retail or anybody come back, I just don't think they learned their lesson yet if they get 1,000%.
We know from previous episodes that you are all about self-sustainability and
Yeah.
not having to rely on venture capital money. So that's certainly something that I do respect about you, that you do have solutions that you put in place to try to help other projects as well. I'll have all the links in the description, links to your X. You also have a great tokenomics book. I'll provide a link for that as well. It's in Amazon. Be sure to check it out. Patrick, always a pleasure. We do it every week, and we'll do it again next week.
Sounds good.